The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Thursday, the 17th of November, and we're looking at the Dow down 266 points at 33,287. Let me just explain. I'm going to take my time today. I also want to do a number of different things. Some people have been texting and saying, hey, can you do more of those intraday patterns? Well, look, here's the dollar. Look at this beautiful arch formation with absolutely to the penny. A left side, right side price time match. That's bar symmetry going from the left side around about 840 at 106-ish, 95 up to the high that was made at 107.24 at about 906, and it comes down, and in the exact number of bars, it goes where? To the 200-period moving average from which it propelled itself higher from earlier at that 8:30 time frame. And comes right back and it tests it, and now it's trying to rally. I'll do a lot more than in my show coming up right now. Let's go back to the story, just get these out of the way. So I've been talking about this since about a week ago. I said I'm anticipating that we're going to go into a very choppy period here as the market makes some kind of near-term, I'm only calling it a consolidation, just a digestive moment, and that I'm anticipating that the Dow has been the leader, that it could stall, and that we could see some catch up in the other indices. And of course, they did a great catch up, and now they're all coming down together. We're looking at the little tiny doji candle after that. It's called what I call a silent doji. It's kind of a heads up to say, hey, if you had done a scan for higher highs and higher lows, or whatever, the low or the most recent low or the most recent high, it won't show up. But the bar just before or the bar after, I had a whole webinar on this. If you're a subscriber to my opening call, you'll be able to find it. It's called the silent doji. And that silent doji said, if we close underneath yesterday's low, that would not yesterday, it would be 2 days ago, underneath the low of 33,592, there's a really good chance that you're going to test both the 9-period moving average, that's at 33,293. We've just done that. And then the 14-period moving average of 32,943. I don't know yet whether we're going to go back to the 200-period moving average of 32,380, but it does say just at this particular time, the upside is limited as we digest these huge gains. What we're looking at is in the S&P. Just let's get these out of the way. S&P also had a doji candle, touched exactly to the penny the 200-period exponential moving average in the daily that gave it resistance. It's pulling back. It pulled back yesterday to form a peak F. Here I could still say could be a counter trend F/B peak, but I'm pretty sure it's going to be an F, and it will be an F if the S&P breaks under 3880. And right now it's still quite a bit higher, 3912. And within that context, what we're looking at here is a gap down. No, this is not an island reversal. It would have to have a gap on the left side as well. But this is a pretty serious. But the stochastic still at 83, and the MACD is good. On balance, volume is not. And this gray line, the relative strength, is pulling back. So far, the technicals are more favoring the upside than the downside. But near term, we're consolidating. QQQ made a peak D. Gaps down today. It hit the Chapman Wave inside track repellent zone in the weekly chart. The week's still got a long way to go. We've got all of today and all of tomorrow to go to see whether or not it's able to break out to the upside, or if all of next week we don't go above the high of 3 days ago of 293.26, and we're down at 282 right now, down 3. So not bad action, but it's not great action right now. IWM, Russell 2000. Russell 2000 is also an alternate count, F/C, and with a doji candle just above the 200-period moving average, has a sharp move down yesterday, has a sharp move down, gap down today. The day's young. Anything can happen. I'm sure buying's going to try to come in, because that's the character of where we are right now. And even more important, what I'm looking at is the weekly chart has started to improve a little bit technically, but look, the 9-period moving average in the weekly chart is still negative. It is so close to turning up. Maybe it'll have to take another few days before it can do that. We're looking at the dollar, DXY. The dollar is up 61 ticks at 106.92. Look at that beautiful left side going over months. Look at this. From August the 10th at 104.64, it goes up to peak D. There's a second buy mode. It goes up to peak D at 114.78 on the 28th of September. And look at this incredible bar symmetry. It comes down almost to 104.64. It goes to 105.20. What was that? 105.34. I would say with less than $1, after all that time going all the way from 104 to 114, 10 points higher in the dollar, and then coming back down and just missing it, hits the 200-period moving average and rallies off that. This is on a near-term basis. Let's go to gold. We're looking at gold right now. I went to a peak B. That's the only way I can count it, because that was the lowest low right there on the 3rd of November. Continuous contract 18.3. This is a peak B. Yes, it could fail because it's way under the previous peak D high of August, around about the 18, I think it was 1818 or something level. And here we are just above the 200-period moving average for 2 days, having touched it over the last 5 days, touched it every day, and now pulling back. So a breather in the gold as well. Let's do silver. Silver this is the daily chart right here. I've expanded it. Peak E pulling back under the 200-period moving average. We're looking at the EUR USD dollar. There we go. This is the euro-dollar currency pair gone to a peak. I'm calling this for now peak F. It could be an alternate count, but I'm just calling it an F for now, having a bit of a digestive moment at the 200-period moving average. When did I even talk about the 200-period moving average in the euro-dollar? It didn't touch it. I'm scrolling to the left. It has not touched the 200-period. Look, it missed it back in September of 2020. Well, no, wait a minute. Is that 20? I think it is. Yeah, that must be 2021. Sorry, 2021. And then it broke down in June the 16th of 2021 when it was up at 1.21213. It broke down under the 200-period moving average, and it hasn't touched it since. Unbelievable. What a nice technique to add to your toolbox. And until 3 days ago, it touched it, and it's touched it for 3 days now. USD JPY, that is the yen, or the US dollar yen Japanese currency, went to a peak D, pulls back. There's bar symmetry here, but it's got another few days to go to see if it's going to touch the 135.81 level. It did get to 137.6 few days, so it's got a long way to go. We'll see what happens. All right, so I've got that out the way. I wanted to look at crude oil. Crude oil is, look at this 200-period moving average. Is this a magnet line or not? It's like a sine wave. It goes over it and under it and over it and under it and over it. And now it's back under it. And my suspicion is that if this low of the 18th, the continuous contract, 18th of October of 80.71 is taken out, the gap crude oil quite a bit lower. I'll be back in a moment. Basil Chapman, Target Conditions Hour.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, folks, so we're back. So let me just finish up with the TLT. The TLT, which is the bonds, had a really strong move going from 91.85 to the high yesterday in the 101 area. And it went above the left side, right side price time match that I was looking at, but it was a leg C, probably a peak C. So now it's going to be a little bit more difficult for the bonds to, let me just see. Oh, no, stochastics at 93, so 93%. MACD's good, everything's good. On balance volumes are lagging a little bit, so there should be a squeak to a higher high above 101.45 over the next couple of days. You know my rule of 136. Meantime, back at the ranch, let me show you a couple of things. So I thought I'd do this because I'm enjoying it so much. It's what I do throughout the day. Even if I'm not trading it, I'm doing this all the time because, like I play tennis, so even it's like practicing your strokes. I'm also a former clarinetist, a professional clarinetist. Now I just play for fun. It's like practicing, doing your etudes and stuff. Got to get the fingers working, etc. But what we're looking at here is to practice the technique. So what I've done is, here's the E-mini. Look at this left side, right side price time. Actually, a whole bunch of different things. Look at this beautiful left side, right side price time match right here. Then it comes back down. Makes a cup formation, fails at a peak C1, C2. You know, that's where it almost gets to a D, but it just fails. But the technicals say there was enough impetus to, it missed it purely on a technical basis, but it should have done it. And that counts as a D. And then you can see a sharp pullback. You got that. It went to a lower low. And that started off a nice rally from 927 this morning in the E-mini. And it goes peak A, peak B, peak C1, C2, pulls back. But this time holds very nicely. Goes to a D in a shorter time period than the left side, right side price time match. It's usually a big negative, especially a D below the previous major peak. And what does it do? It pulls back, but it holds the left side low. And now it's gone. I always put in, if I can, to be ready. I put in a phantom peak if there are two bars that have parallel highs, and the technicals at that moment had turned down, which it did in the unbalanced volume. But I'm always ready to say, it doesn't mean to say it's a D. I've got there a little quicker, but I'm being prepared. Well, what happens is I now can say that this is the real D. I did a left side, right side price time match to that, And now what we've got is, because all the technicals were good, there was no reason to think that there should be a major pullback. That A is no more a red A, it's a blue A. And the objective in the Chapman wave is to always correct the notations, the peaks and troughs notation. Why? Because you want to be on the right side of the trade. You don't want to be saying, stubbornly saying, it has to be what I'm saying. No, the market is the market. So what we've done now, and let me get rid of this rectangles. I've had webinars on the large rectangle and the narrow rectangle. The large rectangle very often can see the price make a lopsided cup. I call it the gravy cup pattern. And look, here's the low. I couldn't draw a left side, right side price time match. Well, I actually got to this a little late because I'd done the news and all that stuff. So, and I already put in that phantom peak because I was doing this very quickly. But I'd already drawn in the left side, right side price time match to 10:19. That's the time, 10 a.m., 19 minutes past 10. And what happened is 1 bar later, it went to a higher high than the highs that I was looking at. I took it from this candle right here, not the peak D, the next one, because I like to bump up against the resistance. Now we've got a peak D, and look at the 200 period moving average. My rule of thumb is the closer you get to the 200 period moving average, it reverses from being a repellent to a magnet. Once it changes from a magnet to and reverses course, that's something else. But until it does that, look at the magnet. It breaks above it for the very first time in hours. And then it goes above it for 1, 2, 3 bars, 4 bars, and now it's struggling to go even higher. So let me do this. I wanted to do some other things. Look at gold. This is the 1 minute chart, continuous contract. I had left side, right side price time match drawn in, 2 of them actually. One was right here that I did much earlier. It went to a peak F from the low in gold at 8:06 this morning at 1758.9 the continuous contract. It goes above the 200 period moving average. It had before at about 7:59 a.m. it had tried to get above it and it couldn't. It failed. It did go to that high right there, reversed, and that's usually a clue to say now the 200 period moving average is becoming more important. And what happens is this time it goes, and within 5 bars, 4 of the bars touch the 200 period moving average. One screams high and goes to a high of 1768.7 and then comes tumbling down. Look at this beautiful. There's nothing here that you can make up. That was the high. Here's the plumb line, right? The number of bars on the left match exactly to the exact number on the decline that took out this left side low of 1758.9 at 8:06 this morning, took it out right there. At 8:56, it takes it out at 1758.1, tries to bounce up and makes lower lows, and then starts another turn. And now that turn says, well, maybe now you can use this as your plumb line. I like if visually, if you have to do it mathematically, in other words, computerized, you said, where would you take it from? I like to go right through the resistance to the major, like the cliff, precipice on the left, bump against it, and that makes this the midpoint right here. So you start your count, Chapman wave. Let me just do this for those of you who are new and say, what the heck is going on here? What the heck is going on is that if you had to go from, hello? No, don't tell me. No, it's there. It must be there. Oh, in the way. Good. There it is. Whew. Okay. In the Chapman wave, you try to identify the lowest low bar and merely count each successively higher peak, alphabetize sequentially A through G, uppercase on the way up, lowercase on the way down. A, B, C, D, the 4th highest peak is where other things can happen. Your target is to go from a buy signal, upgrade it to a buy mode, which means you're going to go to at least a D. It can go higher, but D is your objective. And then other things happen. So what happens is we count the peaks right here. Peak A, B, C, it goes to a D, holds steady. Then look, the 9-period moving average right here gave you a buy signal right there. at 916 at about 17. Let's call it 1760, and it holds all the way through until it breaks down at 1762. So in price, he says, this is the reason why I say you've got to use other things together with your major tools. If you're able to identify the doji candles right here as the low and the on-balance volume and other things as giving you a signal right here, you get in, and then you get the confirmation of other things. And that confirmation took you to a peak E, a peak F. It was still holding well, even though the MACD and stochastic was sliding. Remember, that's the rule. If you have technical indicators that keep you in a trade much longer, look what happens. It goes close to the 200-period moving average at F. It touches it at G and then pulls back and makes a beautiful cup formation. And now you start another peak A, B, C, and we've just made it D, above the 200-period moving average goal. Next, we'll show you natural gas.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. I was going to go to natural gas, but I'm going to go in the den. Someone, who was it, said, Coda says, NQ 3-minute forming a Gartley. Well, I've got the 1-minute chart up. Let me show you something. You can't make this up because this is in real life, right? You're looking at it. So you identify the lowest bar, and then you count each successively peak. So the low in the NQ, I've gone to the continuous contract just because for some reason I just grabbed that. So the low at 9:27 this morning was 11,528.25. These 6-7 numbers, it's real tough because you have to really check everyone to see that you haven't missed it by 0.001 or something. So peak B is at 932. Followed 1 bar rest, peak C, 1 bar rest, D. You remember my rule of thumb, 136. That's really bullish, but then you've got to expect a little bit more of time. So this is every bar between, this is a 1 minute bar, but every bar between has made a consolidation from each peak. A, 1 bar, B, 1 bar, C, 1 bar, D, 1 bar, 2 bar, 3 bars, and then the fourth breaks out. But wait a minute, there was a little peak in between. You got to count each peak. So that's A, gray A, because I haven't got any confirmation it's a brand new buy signal. And then the rule of thumb is, if the MACD and stochastic, the 9-period moving averages are still very strong, just count it alphabetically. But when you get to G, and this is a rule of thumb that I hope that folks are taking into consideration, because I've said this for a very long time now, that when we get to G, I know that there are certain rules that I've had in my CD introducing the Chapman Wave methodology talks about peak G and what can happen at G, and we've got a number of people. Bob from Saratoga has made a big deal about the G, uses it very well. But when we get to G, I make it a G/C. But in this case, that is an F/C, and lo and behold, we get to the D with the doji top right there above. For the first time in ages, it's above the 200-period moving average for 1, 2, 3, 4, 5. This is the 6 bar, and then it starts heading down, and it heads down at a peak D, and it comes with this beautiful pattern that I call, it's like a falling axe, but it's like a channel that's coming down, lower lows, lower highs, lower lows, lower highs, and all of a sudden it tries to find a base, and it makes the base, and it pops up back to the 200-period moving average. Not good enough, gets repelled. And then it goes for 1, 2, 3, 4, 5, 6, 7. And you know, my rule of thumb is that if it takes more than 5 or 6 bars rest, it's almost as if D comes after that or C comes after that, it's almost like you've triggered a whole new buy signal, because you've taken all that time to, if you have taken that time and you make a cup formation or a V formation and you take it out, you can go quite a bit higher. So you go to C. Now, you remember we talked about this. I can't make these things up. Is this the low? Yes, it's the low. Can I put in a plumb line? Yes, I can put in a plumb line. Could I put in a left side, right side price time average? Now, look, we have all these different. I'm busy reading. The other day I was reading Tom's book. I wanted to go through volume because I use unbalanced volume. He uses pure volume itself, the vertical lines of volume. I use the dot that says this is the total volume, and it's a running total. So I'm trying to just review all that, because at this particular point, I'm trying to put together a package that really combines a lot of things. And I'm busy also reading Larry Pesavento's book, and Trade What You See Now. What's really important, and he talks about the gardening and the, okay, here we go. Talks about the gardening. But in the meantime, I'm trying to put these together. But look at these techniques. There's nothing here that you need except your own package. And every software package is able to do straight lines. You might not have the rectangle like TradeStation does, but you'll have something like it. Use your own methodology. I do this so that I can demonstrate. Half the time I don't have to do this. I'm just seeing it because I've done it for so long. Now I'm putting this in here. Here's your plumb line. Here's your bars to the left on NQ. I've got the continuous contract. At 9:51, it goes to 11,635 and 25 cents. It pulls back for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars. I've got the plumb line, which is your vertical line, meaning bar symmetry from the left side to the right side, that says there should be, I can't remember, did I say 13 or 16? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 bars. 14 bars should be 14 bars before it takes out the high of 11,635 and 25 cents. So here we go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 bars exactly. It makes a high of that bar of 11,637.25. But the MACD stochastic, everything is good. So it continues high to where? A peak C, then a peak D. Peak D is your objective. What does it do at a peak D? I can put a down arrow because it's gone down sharply. There you are. So let's go to, I said natural gas. I have no idea what that is right now. Natural gas. I did some of the work. So here it is. It makes a peak D, then a quick peak E back at 920-ish, pulls back to the 200-period moving average. What does it do? It goes to peak A, B, C, D in the left side, right side price time match that just misses by 1 bar, a 1 minute bar, and by a fraction in points. And it makes a peak D. So I can put the down arrow right here, down arrow, and it pulls back to trough A, trough B, trough C, trough D on the 200-period moving average. Let's just say I did this. I'm doing it live right now. I'm going to do a vertical line right there. All right? Now, the whole thing about this is that I sometimes use a particular candle. If it looks to me like there's no way we're going to get a left side, right side price time match, because of the pattern forming, I have to choose a particular candle. And I always teach about those things, how we do it, what we're looking for. So now I'm going to just click on here to say, let's see what happens. This is green because it's to the right. The number of bars on the left, do they match to the number of bars on the right to get you to that exact same level? Well, it's 1 bar early. And this is peak A, peak B. Look here, peak A, peak B, peak C. Now, you can understand that you don't even need to have the notation here because this is just mathematically perfect. But the whole thing about the stock market, it's human nature. So you know it's going to be mathematically imperfect most of the time. And then what does it go? It goes to peak C1, C2, cup formation. And then you're always expecting a D. Bam, it goes to a D right there. So it goes to the D, oops, the uppercase D because on the way up, and you get your huge move down. Look at this. A huge move down from the 630, whatever it is, 639, or was it 40? 639, 6.398 at 1031, and then it has a little bit of a pullback. It goes right through the 200-period moving average. It goes down to 6.305. And now it's had a huge back. It happened so quickly that it said, oh, I forgot to say goodbye to my friends. So it goes back to the 200-period moving average and it's back there now. Let's look at the dollar, DXY. This is a continuous contract. Look at this incredible, I spoke about that already. The beautiful symmetry. There was first symmetry to this upper move to peak D and then the left side, right side price time match. But there I chose a different thing because when there's a cup formation, I often choose the low bar of the cup. And then what happens? The exact price high of at 9:09 this morning Eastern time, 107.25, it comes back and I've already done this. And then it takes it out, almost touches the 200-period moving average, has a little bit of a bounce, and then it goes down, touches the 200-period moving average, and now it's jiggling around the 200-period moving average. I just thought it would be very nice to do some work to show you that you can put together other techniques, but the core technique that I use is just right in front of you. You just have to count bars. I'll be back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So, folks, let me just show you this. A question came in about TBT. You have something. You gave up trying to explain the TBT pulses. You know, I don't know why. I don't know how to. I gave you the whole analysis of the ultra short Lehman 20-year T-bond ETF. I said this is a leg G/C with a Chapman wave side and doji. I've circled it because I said I'm almost sure it's going to become a G. I haven't changed it yet. I'm going to change it right now. And that G came with a downturn with a down arrow from a sell signal to a sell mode. And then I said there's an arch formation. This is the pattern that I talk about all the time. 3 patterns I emphasize: straight up, straight down, that's 1. Cup formation, that's 2. Arch formation, that's 3. And a mix of 1 and 2 and 1 and 3. The one I have here is 1 and 3, where it's red sharply down, then it makes an H pattern, a cup formation that looks like a lowercase h, fails at a peak A or a B, and then it takes out the left side low. And that says, be careful, because that's the move that can give you a 1-to-1 of the arch high down from the base to a lower low. So let's see if that's the case. I mean, there's nothing to discuss here. This is already old hat. So let me just do this. I'm going to, I didn't type in the A and the B because I said it's obvious, it's going to be a little messy, but now I can afford to do that. We had an island reversal. It didn't fill in the island reversal. And I'm going, if I can get the mouse to, what's going on here? Mouse, thank you. So here we go. Peak A, peak B, minus because it took out the left side low. That's the thing you've got to be careful of in the H pattern. If it only goes to an A or a B and it takes out the left side low, and that's the base that we're talking about right there, what are we looking at? We're looking at the chances of going down 1-to-1 to at least 1-to-1 to the downside. If within 3 bars it cannot get back to the left side high and then takes it out, so here we are. Let's see what we can do. I'll make that green for now, just so I can give you different colors. And then I'll put in new parallel, and I'll put it in right there. And it says, there you are. So this should make it pink so that you can distinguish. And it says TBT could go to, this is the inverse, that means yields. As this goes down, it goes together with the yields. And that says the TLT could rally, but the target would be a 1-to-1 left side, right side match over there. That's not going to work. Oh, it could. Yeah. So that would take you to this candle low right here of 31.41, but the actual move itself is right there at 31.39. So within the 39.41 area, that would be the target on the left side. So yeah, I've spoken about it. I'm not going to discuss the technicalities. It's just telling you that the TBT is the opposite of the TLT, which made a peak C. This is now, sorry. a peak C right here. Well, the day's young, it could still go higher, but I'm anticipating that it has another pop to the upside, and that's going to be the big test of whether yields can come down because the TLT bonds are rallying. So that's what I want you to do. The other thing is I wanted to show you what I do when it's very indistinct about the left side, right side price time match. So I especially kept this in here. I would have made a modification. I teach how you can use the Chapman wave inside wedge target resistance line. And really, I hope people are appreciating that this is like a course. I could have given this as a paid course. I'm not. I'm doing this because I feel that the techniques within the Chapman wave methodology are getting short shrift. There are a lot of people that use it and a lot of people that use it very well. But I mean, 20 years and it's not a household name. Just not my actual Chapman wave, but the techniques themselves, that's very disappointing. And look at this. I normally would not, I would say, look, that's not going to hit the left side, right side to the plumb line right here. So what would I do? I would move it, and maybe you call it artistic, but there's a particular candle, and I would have moved it, and even this would have said, that's too far, that particular candle there. But I would have said, that's okay, give it time. But then I would say, it doesn't match because my inside wedge target resistance line is a little too extended. Well, it doesn't matter. It doesn't matter because it's saying this is the technique that you're using. It is the arch formation, the Chapman wave inside wedge target support line, this dashed pink line, is giving you all the information you want. And roundabout, based on this line, roundabout the bar at 10:48 a.m. this morning, it should hit the left side low that you've chosen, which is this candle low right here of 39.21.75. And where is it right now? It's exactly now at 39.21.75 as we speak. I mean, this is live, all right? There's nothing here that could be made up. These are the techniques. And did that become a repellent zone, the 200-period moving average? Absolutely. So this is the actual low that I should have taken to, but I like to go step by step. This is the low that I used right here, and it did it in a shorter time period by 2 bars, but in fact, at the bar that I said was the time it did it. Now the next thing I would draw in is, as I'm talking, I was going to say the next thing I would draw in is from the low, the real low that I'm targeting, is that the one that I would use? Yes. And I would use, at first, I have no choice, but I have to use the plumb line that I chose on the right over there, and there it is. And I'm saying that by 10:51 this morning, we should be testing the low of 10:13 this morning of 39.17.50. Where are we right now? We're at 39.18.75 up to 39. So this is live. I'm showing you too. This is why when I talk about potentially trying to set up a live, I've never done a live trading. We've always had trades in my live shows. That's my all-day webinars, which are usually 6 hours or so. And the reason is I don't want to advertise. I don't want I didn't ever want the pressure of saying, oh my God, I've got to produce results. And then people stop listening to the technique because they're so busy saying, I'm in here and here. But I am thinking that I want to do it live trading, call it a live trading, because every time we've done it, we've had trades that have worked out very well. But that's not good enough. If you call it live trading, the obligation is that you are hopefully going to make money for your participants. So I'm just showing you here that it doesn't matter whether this was called a live trading show. This is my show today at 10 o'clock on the 17th of November, Thursday, and I'm showing you a number of the techniques right here. Now, the whole idea is, how do you put them together? Because it's all there. You just have to read them. You don't have to do anything. Now, what I have found is, and I'm doing this a lot more than I had done. I used to do it before, but I didn't always keep it there so that you could see it because it got messy. But what I am doing now is I'm starting to use, look, this is the Chapman wave 1-to-1 parallel extension. What's the difference between any 1-to-1? In this case, it's the number of bars and the angle. Look at the angle of this move from peak E in the 10-minute E-mini at 3:10 this morning. Of course, I wasn't up, but when I came up, when I was up, I started measuring these things. Look at that measured move there, and look at the exact parallel move in the second one, and look at the third one. It went down. It's like maybe a point more than the third extension of the one-to-one. I'll be back. We'll wrap it up for the final segment of the show. Basil Chapman, Tiger Tick, this is our Dow's down 223, S&P down 44. We'll be right back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So let me just show you something. You remember the NQ we were looking at? We're looking at the continuous contract. It's the same price as the December contract. So it made a peak D and it pulled back. But here's the thing that you've got to monitor. I could have done left side, right side price time match to the low that was made way back down at 10:30 in this morning at 11,587. But you had your dreaded H pattern, failed at a peak B, went to a B minus. You did get your almost a 1-to-1 extension, but look at the 200-period moving average. It's trying to hold it up. If it fails and it takes out, I would say 11,590 as support over the next 30 minutes or so during Steve's show, be careful, because by about 11:05 this morning, this is a minute chart, 11:05, you could start to see, I would actually extend that a little bit, but a little later this morning, you would see if it breaks that 11,600, 11,500 level, be careful, it could be a quick slide down to that left side low. The way it would change is if there's a trade and it starts to hold very nicely at 11,600, That would be very good. 11,640, I'm sorry, 11,640. So with that said, let's just wrap it up here. Tomorrow I'll be back, of course, and let me do this. You've got great programming here. Stay tuned. You've got Steve Rhodes coming up, and we're looking at the Dow down 274. The way I'm looking at this is that the 9 is still very strong over the 14-period moving average, and that's giving some kind of support. To get the 9 below, you'd have to go to the 200-period moving average of 32,379. So far, it's just a near-term sell-off. We haven't added to our long positions. We've taken some off. Great profits. Now we want to be putting back. Plus, we've got a whole bunch of stocks that I'm very interested in. But today we said do nothing except we bought one thing, and it is based on a purely technical aspect. And we'll see if that's going to work out. So have a wonderful rest of the day. I'll see you tomorrow. I hope you got something out of these left side, right side price time matches. There's bar symmetry that I wanted to show. And we'll be back tomorrow. Have a great day.